Welcome back, everyone, to the ACE Your RES exam key topic deep dive series. This is where we try to make sense of those sometimes tricky concepts you absolutely need for your Singapore real estate salesperson exam.
That's the goal.
And today we're tackling, well, probably the most emotional topic in Singapore property, land tenure.
Oh, definitely. You just mentioned leasehold or freehold and, sparks fly. People fall into two main camps, really.
Right, those who absolutely wouldn't touch leasehold with a 10-foot pole.
And those who are perhaps more pragmatic, they see tenure as just one variable among many.
Exactly. But for your RES exam, you can't afford to get caught up in the emotion. So our mission today is clear. Cut through all that noise. We need to unpack leasehold, freehold, fee simple, and really understand what lease expiry means in Singapore.
Objectively, based on facts. That's what you need for professional competence.
Let's get started. Maybe some quick definitions first, just to frame things around time.
Good idea. So, freehold. Basically, this means the owner or proprietor owns the property indefinitely, like forever, in perpetuity.
And they own the land and the building.
Yes, both. They're responsible for everything. And historically, these were mostly issued before Singapore's independence. It's rarer now.
Okay, which brings us to the main player today, the 99-year leasehold.
Right. This is the standard for almost all new land releases now. It's a fixed term, 99 years.
And when the clock runs out?
Ownership goes back to the state. Simple as that. No ifs, ands, or buts.
So as an owner, you're a subsidiary proprietor. What does that mean practically?
It means you own a share of the land, usually based on your unit size, but you don't own the actual ground underneath indefinitely. The state retains the ultimate ownership. All government land sales, the GLS sites, they're all 99-year leasehold now.
Got it. Then there's that slightly odd one, the 999-year leasehold.
Ah, yes. The almost freehold.
Yeah. How does the market see that?
Well, practically speaking, buyers and valuers often treat it as almost equivalent to freehold. I mean, 999 years, that's like 10 generations.
True.
So the market value usually reflects that. It often trades very, very close to actual freehold prices. Technically finite, but for all practical purposes, it feels indefinite.
Okay, definitions down.
Yep.
Now, let's dig into the legal foundations. The RES exam expects you to know these quite old legal doctrines that still shape everything today.
Yes, the really fundamental stuff. We need to talk about the doctrine of tenure and the doctrine of estate.
Right. Sounds historical.
It is. Comes from English common law. The doctrine of tenure is the starting point. It basically says that all land ultimately belongs to the king, or in Singapore's context, the state.
So you can't really own land in the way you own, say, your watch.
Exactly. That concept is called allodial ownership, absolute ownership, and it doesn't really exist here. Instead, you hold land from the state. You're technically a tenant of the state.
Okay, you hold it for a certain time, maybe under certain conditions.
Yeah, precisely. You hold it for a duration, which is the estate, and in return for service, or nowadays usually a payment, which is the tenure.
Okay, so if tenure is about the ultimate state ownership and the conditions, how do we get to have rights we can actually buy and sell? Rights that have value.
That's where the doctrine of estate comes in. It's quite clever, really. If tenure says who ultimately owns the state and under what conditions, a state defines the time dimension of your rights.
The time, okay.
An estate is basically a bundle of rights you hold over the land for a specific length of time. It allows different people to hold rights over the same land, but for different periods. That's what makes a property market possible.
Okay, so tenure, condition state ownership, estate time duration. That's the key distinction for the exam.
Spot on. And understanding estate as time lets you easily categorize rights. Is the time indefinite? That's a freehold estate. Is the time fixed? That's a leasehold estate.
Makes sense. Now, within that freehold category, there's this term, fee simple estate. People often just say freehold. Are they the same thing?
Not quite, although they're very closely related. Freehold is the broader category. It technically includes other, much rarer forms, like a life estate, where ownership only lasts for someone's lifetime.
Okay, never really hear about that one.
No, it's uncommon. The vast majority of what people mean when they say freehold is actually the fee simple estate. This is the highest, most complete form of ownership you can have.
What makes it most complete?
It gives the owner the widest possible range of rights and control. Crucially, it's held in perpetuity, no time limit. And importantly, it can be freely passed down to heirs without restrictions. That's the simple part. It's unconstrained inheritance.
So if someone says they own their land outright, they likely mean fee simple.
Almost certainly. We should probably mention, just for completeness, the estate in perpetuity. It sounds similar, also indefinite, but it falls under the State Lands Act,
Meaning?
meaning the state still reserves certain rights to impose conditions later on. So while it's forever, it's not quite as absolute as fee simple, which is seen as the real gold standard for private control.
That's really clear. Thanks. Now, let's bring this bundle of rights idea down to earth. How does it play out differently between, say, an HDB flat and a private condo, even if both are 99-year leasehold?
Excellent question. This is where you see the doctrines in action. Both might have the same 99-year estate time, but the 10-year conditions imposed by the state creates vastly different bundles of rights.
So the HDB bundle, it's much smaller, more restricted.
Way more restricted. Think about it. You've got the minimum occupation period, MOP, usually 5 years, where you can't sell or rent the whole place out.
Right.
You have strict eligibility rules, who can buy, marital status, income ceilings, all that.
The racial quota, too.
Yes, the ethnic integration policy, the EIP. And even after the MOP, there are rules about subletting the entire flat. The conditions are extensive.
So the state is using its land ownership power to achieve social goals, which directly limits what the HDB owner can actually do.
Precisely. Now compare that to a private condominium, also on a 99-year lease.
Right.
The difference is stark.
How so?
Far fewer restrictions. Generally, you can sell it whenever you want, subject only to things like seller's stamp duty, maybe.
Okay.
You hold a strata title, which gives you that share in the land we talked about. Day-to-day stuff, like renovations. That's usually handled by the Management Corporation Strata titled MCST, not HDB.
So even with the same 99-year time limit, the condo owner has a much larger, much freer bundle of rights.
Definitely. It really highlights how 10-year conditions shape the practical reality of ownership. It's a great comparison point for the exam.
Okay, legal framework covered. Let's talk money. This is where the debate usually heats up for buyers. We know freehold costs more. Why would someone, especially an investor, choose leasehold despite that ticking clock?
Well, the first and most obvious reason is the entry price. Leasehold properties are generally, around 10 to 15% cheaper than a very similar freehold property. Same location, similar age, facilities.
That 10–15% is basically the forever premium you pay for freehold.
Exactly. That's the price tag on perpetuity.
And for an investor, that lower price immediately changes the numbers.
Absolutely. This is the investor's view. Think about rental yield. The rent you can get for a property doesn't usually change much based on whether it's freehold or leasehold, right? A tenant pays for the space and location.
Yeah, tenants don't usually care about the land title.
Right. So if your rental income is roughly the same, but your purchase price, your capital outlay, was 10–15% lower for the leasehold.
Your rental yield is higher. Simple maths.
Exactly. Higher cash flow return on your investment. That's often paramount for investors.
And then there's the appreciation argument. You mentioned data, I think from 2019, showing leasehold condos actually appreciated faster over a decade, like 86% versus 60% for freehold. That seems counterintuitive.
It does, doesn't it? But that often reflects a couple of things. One is the lower starting base.
Here.
A percentage gain looks bigger if you started lower. It also reflects overall market trends. Sometimes newer leasehold launches and hot areas drive those figures up. It complicates the simple freehold always appreciates better narrative.
But the emotional pull for freehold, especially for owner-occupiers, is still huge. What are the main arguments for paying that premium?
The biggest one, without a doubt, is the legacy view. People buy freehold thinking of it as a generational asset.
Something to pass down.
Exactly. In a place like Singapore, where land is so scarce, owning something forever feels like true financial security you can leave to your kids or grandkids. It's less about quick returns, more about long-term wealth preservation.
And the scarcity itself adds value, right? Since the government isn't releasing new freehold land.
Huge factor. The existing stock of freehold land has an inherent scarcity value. Because supply is capped, prices tend to be very resilient, especially over the very long term.
You mentioned an example, Twin Regency versus Mariprime.
Yeah, classic comparison. Twin Regency is freehold, Mariprime leasehold, quite comparable otherwise. Studies show Twin Regency generally held its value or outperformed Mariprime over a long period since launch, suggesting that scarcity provides a strong price floor, especially as the leasehold property ages.
And the other big hope for older properties, en bloc potential. Is it better for freehold?
Theoretically, yes. Developers might pay a higher price per square foot in an en bloc sale for freehold land because, well, they're getting perpetual ownership. The owners are seen as giving up more.
And crucially, freehold doesn't suffer from that lease decay problem.
Correct. It's immune to the value erosion that happens as a lease gets shorter and shorter.
Okay, let's talk about that erosion, the Bala curve. It's famous, or infamous, in property circles. What does it show?
It's a graph, essentially, plotting property value against the remaining lease years. It clearly shows that value depreciation isn't linear. It accelerates.
When does it start to bite?
The first 20 years or so, the golden years, decay is usually minimal. But once a lease drops below, say, 70 years, and especially below 60 or even 40 years remaining, the curve steepens downwards quite dramatically. The value drops off faster and faster as it approaches zero.
Because the end is in sight.
Precisely. And it's not just theoretical market sentiment anymore. There are real financial hurdles now linked to remaining lease.
The rules around using CPF and getting bank loans, that changed things, didn't it? The 2019 rules.
Massively. The key rule is the property's remaining lease must cover the youngest owner until they reach age 95.
Okay, let's break that down. If I'm 45 buying a place with 60 years left.
Then 60 years from now, you'll be 105. The lease 60 years covers you until age 95. You're fine. You can likely use your CPF fully, get a standard loan tenure.
But if I'm 45 buying a place with only, say, 40 years left?
Then in 40 years, you'll only be 85. The lease expires before you reach 95.
And the consequence.
Big consequences. First, you likely can't use your full CPF ordinary account savings for the purchase. Second, and perhaps more critically, banks will drastically shorten the maximum loan tenure they offer you.
So instead of a 25 or 30-year loan?
You might only get a loan for, say, 10 or 15 years, maybe even less. Basically capped, so the loan ends before the lease runs out or hits that age 95 threshold. This means much higher monthly mortgage payments.
Which prices out a lot of potential buyers.
Exactly. It shrinks the pool of eligible buyers, especially older ones. And when demand shrinks, the price naturally falls even faster than the Bala curve might suggest. It's a real financial constraint.
Okay, but let's give Freehold a reality check, too.
Yeah.
People pay that 10–15% premium, often for legacy. You mentioned an emotional buying caution. Is buying just to pass it down always smart?
It's worth questioning. This idea of the forever home that stays in the family for generations,
Right.
does it still fit modern society?
Maybe not. Kids move away, preferences change.
Right. Younger generations might prefer a brand new condo with smart home tech over grandpa's solid but dated freehold apartment. Paying a huge premium for forever might be wasted if the next generation just wants to cash out and buy something different. The opportunity cost of that premium is significant.
And older buildings, freehold or not, cost more to maintain.
Absolutely. Aging maintenance is a big one. Older condos, even freehold ones, face rising costs for repairs, lift replacements, pool refurbishments, facade painting.
And those costs get passed directly to owners via MCST fees.
Correct. Higher monthly fees. Plus, that older freehold property faces stiff future competition. Think about River Valley, lots of older freehold places, but then a shiny new 99-year leasehold like Riviere launches nearby with amazing facilities and design. Which one attracts the tenants or the next wave of buyers? The old freehold might struggle despite its tenure.
And the final irony for freehold, that en bloc potential we mentioned.
Yeah, the en bloc resistance. It's actually often harder to get a freehold development sold collectively.
Why is that? No urgency.
Exactly. There's no ticking clock, no lease expiry forcing owners' hands. If the building is reasonably well maintained, many freehold owners, especially those living there, have little financial incentive to sell the home they love. Getting that 80% or 90% consensus for a collective sale can be incredibly difficult. Developers might actually find it easier to target leasehold sites where owners are more motivated by the approaching lease end.
Right. This brings us to the sharp end, Section 3. Lease expiry. What actually happens? This is absolutely critical for the RES exam. Who takes the land back?
Okay, the vast majority of land in Singapore, something like over 3/4, is owned by the state, and it's managed by the Singapore Land Authority, or SLA.
So when that 99-year lease hits its final day, minute second,
the ownership of the land automatically and legally reverts back to the state via the SLA. And this is the crucial part. Any buildings or structures on that land effectively become the state's property, too. The previous owner's rights are completely extinguished.
And compensation. What does the SLA owe the people who own the apartments just moments before?
Legally, nothing. The SLA has absolutely no obligation to pay any compensation or reimbursement to the former owners for the buildings they technically owned.
Zero.
The value of their asset, the building they paid for, goes to nil at the moment of expiry. The risk is entirely on the owner. This is the stark legal reality of 99-year leasehold.
That sounds brutal. And it's not just a theory, right? We have a real-world example.
We do. The Geylang-Lorong 3 case study. Everyone studying for the RES needs to know this one.
What happened there?
It involved a plot of land with a 60-year lease, granted way back. It became the first residential land parcel in independent Singapore where the lease actually ran out. That happened on January 1st, 2021.
Wow. So what did the owners have to do?
They had to vacate. All 191 units, including about 40 homes people were still living in, they had to move out before the expiry date.
Did they get any help?
Yes. The SLA did work with HDB to assist the owners, offering relocation support and priority for finding alternative public housing. But critically, they weren't compensated for the loss of their property value, which became zero.
And the land itself?
The land reverted to the state, the old buildings were cleared, and it's now earmarked for new public housing. It's part of the government's plan to rejuvenate the Kelang area.
So it proves the point. Lease expiry is real, reversion happens, and the value disappears for the owners.
Exactly. It's not a hypothetical risk. It's a planned part of Singapore's land management cycle.
Okay, so faced with that Geylang scenario, what can owners of aging leasehold properties actually do? Are there any options besides just losing everything?
There are basically two collective options they can try to pursue. But emphasis on collective individuals can't do this alone. It requires massive agreement among owners.
Option one.
Option one is trying for a lease top-up. Owners can collectively apply to the SLA to basically reset the clock, to top the lease back up to 99 years.
So if they have, say, 50 years left, they apply to buy back another 49 years.
That's the idea. But it comes at a very steep price. They have to pay something called a differential premium to the state.
And how is that premium calculated? It must be huge.
It's assessed by the SLA's chief valuer. They looked at the land value, considering its highest and best use according to the current master plan, what could potentially be built there now, which might be much denser than the existing structure. Then they use specific valuation methods to figure out the cost of extending the lease. It's often prohibitively expensive, especially for regular homeowners.
So it's not just about affording it. SLA still has to approve it.
Correct. Approval is entirely discretionary. SLA will consider if topping up the lease aligns with the government's long-term plans for that area. Does it optimize land use? Is it consistent with future zoning? Even if owners could somehow pool the money, SLA might just say no if it doesn't fit their strategic plans.
Sounds tough. More likely for big companies than condo residents.
Generally, yes. You see it more with commercial properties where the scale might justify the premium, or where a developer sees potential for major redevelopment. OUE Bayfront is a known example of a successful commercial lease top-up. For residential condos, it's extremely rare due to the cost and the approval uncertainty.
Okay, so if lease top-up is mostly out, what's option two, the more common hope?
Option two is the collective sale, or en-bloc sale. This is the preferred exit strategy for most owners of older leasehold properties.
How does that avoid the expiry problem?
Because they sell the entire development land and buildings to a private property developer before the lease runs out.
So the developer takes on the problem.
Exactly. The developer pays the owners a purchase price. Then the developer deals with the SLA to top up the lease, paying the differential premium themselves, which they would have factored into their bid.
And the original owners get?
They get cash, compensation. Often a significant windfall compared to the depreciating value of their aging unit. It allows them to monetize the asset before it expires worthless.
We've seen some huge en-bloc deals over the years. Forecourt, Pacific Mansion.
Massive deals. Forecourt went for over $1.3 billion back in 2007. That became Dunedin. Pacific Mansion for $980 million in 2018, now the Avenir. These highlight why en bloc is the dream scenario for owners facing lease decay. It's the way to unlock value before the clock runs out.
Now, before we leave this section, there's a tricky point you mentioned earlier, something about leaseholds not always reverting to the state. The developer-issued leasehold caveat.
Yes, this is a nuance you need to watch out for and definitely something for RES candidates to know. It's less common, but it happens.
How does it work?
Sometimes a developer already owns a piece of land, maybe freehold or 999-year leasehold. Then they decide to build a project on it, but instead of selling freehold units, they carve out new 99-year leases for the individual units they sell.
So the developer acts like the landlord granting the 99-year lease.
Essentially, yes. Far East Organization has done this with developments like Greenwood Mews or the Shore Residences, for example. The original land title remains with the developer's entity.
So when those 99 years are up, where does the land revert to?
It reverts back to the original developer or their successor entity, not to the state's LA.
Why is that a caveat? What's the catch for buyers?
The big catch is on block potential. It becomes extremely limited, almost zero,
Why?
because the developer already knows they're getting the land back for free when the leases expire. Why would they participate in or approve a collective sale where they'd have to pay current owners a premium for something that will eventually be theirs anyway? They have a built-in reversionary interest.
So buyers get the downside of lease decay, but without the usual hope of an en-bloc windfall as a way out.
Pretty much. It's a specific situation, but crucial to identify if you encounter it. You need to check who the original landlord granting the lease was, the state or a private entity.
Okay, we've gone deep into tenure, its legal basis, the money side, the expiry risk. But let's pull back a bit for the final section. For the RES exam and for advising clients, how much does tenure really matter compared to everything else?
That's the million-dollar question, isn't it? And the realistic answer is tenure is important, yes, but it's often just one factor among many. And frequently, it's not even the most important one.
So don't get tunnel vision on freehold versus leasehold.
Exactly. Don't let the emotion around tenure blind you or your clients to other critical factors that drive value and desirability in the real market.
Like that classic mantra.
Location, location, location. Still king. Always will be.
Tell us more. How does location override tenure?
Think about it. A property right next to a major MRT interchange in a prime district close to workplaces. That accessibility and convenience commands a massive premium. People will pay top dollar for that, whether it's 90 years left on the lease or freehold.
Compared to a freehold place way out in the sticks.
Precisely. The freehold property might be forever, but if your daily commute is a nightmare, its practical value is lower for many buyers. Accessibility often trumps perpetuity in day-to-day living and resale value.
Okay, location first. What else?
Amenities, both in the surrounding neighborhood and within the development itself.
So proximity to good schools, supermarkets, parks.
Yes, all those neighborhood factors enhance quality of life and support prices. And within the condo, is there a beautiful pool, a modern gym, good security, lush landscaping? These things make a place desirable to live in or rent out.
And a newer leasehold might have much better facilities than an older freehold.
Often the case. A brand new 99-year condo might offer resort-style living that an older, basic freehold apartment block simply can't match, even if they're in the same district. Buyers pay for that lifestyle.
Then there's the strategic angle, knowing what's coming next. The URA master plan.
Absolutely critical for any agent.
Right.
Understanding zoning, plot ratios, future developments planned nearby. This is crucial.
How does that impact value, regardless of tenure?
Massively. Knowing that the empty land next door is zoned for a park protects your views and value. Knowing it's zoned for a massive new shopping mall could be good or bad, depending on your client. Knowing it's zoned for another high-rise condo means more competition. This forward-looking info derived from the master plan can significantly influence a property's future value, far more than just its tenure status.
Makes sense. You need to know the context. What about the buyer's own goal?
The purpose of purchase has to guide the advice. It's not one size fits all.
So tailor the recommendation.
Always. Is your client an investor looking for the best rental yield and maybe a quicker exit? Leasehold might be financially smarter due to the lower entry price and potentially higher yield.
Versus someone buying their forever home.
Exactly. If the client values peace of mind above all, wants to potentially pass it down, and can afford the premium, then freehold makes sense for them. The right choice depends entirely on the buyer's individual objectives and financial situation.
And finally, market activity itself.
Yes, the sheer volume of transactions. At the end of the day, a property's price is determined by supply and demand, reflected in how often units are bought and sold.
So high liquidity is key.
It's a strong indicator. If a particular development, freehold or leasehold, sees consistently high transaction volumes, it shows there's strong demand and buyers are confident they can resell it when needed. That liquidity itself supports the price, regardless of the underlying tenure. Tenure is just one piece of that puzzle. Hashtag tag outro.
Okay, what a journey. From medieval land doctrines to the specifics of the SLA and one-block sales. Let's try to wrap this up. What's the core takeaway for our listeners preparing for the RES exam?
I think the main lesson is that buying property, especially in Singapore, is a massive financial decision. It demands clear thinking, objective analysis, not just gut feel about tenure.
So acknowledge the pros and cons of each.
Right. Freehold offers that undeniable psychological comfort, that sense of permanence and legacy. But the market data often shows that leasehold, especially in its earlier decades, can offer better financial efficiency, lower entry cost, higher yields, sometimes faster appreciation. You have to weigh those trade-offs based on facts.
And it's interesting, we talked about fee simple being the most complete ownership, but even that isn't totally absolute in Singapore, is it?
That leads to a final, perhaps provocative thought for everyone listening. Even if you pay the premium for freehold, for that forever ownership, remember the Land Acquisition Act 1966?
Ah, the government's power to take back land.
Exactly. The state retains the ultimate right to acquire any land freehold, included if it's needed for a public purpose, like building an MRT line or a new highway.
You'd get compensation, presumably.
Yes, you'd be compensated at market value. But the point is, your forever ownership isn't entirely immune to the state's overriding needs. It can still be taken.
So when even freehold isn't absolutely permanent,
It reinforces the idea that maybe the focus should be less on the abstract concept of forever and more on the practical factors: location, finances, suitability for your needs over your likely ownership timeframe. Maybe paying a huge premium for forever has a significant opportunity cost compared to investing that difference elsewhere.
a very practical perspective to end on. Focus on the tangible benefits and risks over your investment horizon.
Exactly. Understand the rules, understand the market, understand your client's needs. That's how you provide real value as a real estate professional.
Well, we really hope this deep dive helps you ace that tenure section on your exam.
Absolutely. Study the concepts, understand the implications, especially around lease expiry. We wish you the very best of luck in your upcoming RES exam.
Good luck from us too, and thanks for tuning in.